Good morning, Jags. This is Fahad. Today is Thursday, March 11th. Let's get started. So I want to get a couple things real quick out of the way first, and then I have one stock that has a pretty asymmetric bullish opportunity over here. I'll cover that in a moment. But first of all, let's start out with the semi sector, SMH. This sector, semis, is going to be the hottest sector in the market today. And if you look at SMH in pre-market, it closed at 224. It is going to open at 231 in pre-market, basically overcoming the entire weakness that we saw yesterday. And that means if you look at the daily scale, it's going to open above this basing formation in SMH that we saw. And along with that, if you look at what's happening in pre-market price action, so there is NXPI. NXPI closed around 180. It's going to open at 186. Analog devices is guided higher. It's going to open up as much as $4 to $5 to the upside. Advanced micro devices is going to gap higher by $2 to $3 or about 4%. You can just go down the list like that. Here's Sensata Tech, and here's ON, which is on semiconductors. This thing is going to open up about 4% as well. So across the board, expect a lot of strength in the semi sector today. The question is why, right? The question is that there is this news that was posted about 3 hours ago. And in this news, they came out with this and they said, this is from the South China Morning Post. The US and China are setting up a semiconductor working group to ease export controls and improve supply chain security. Now, this actually really works in the benefit of both countries because China naturally does not want a friction with the United States when it comes to the import and exportation of the semiconductors. And that was the big beef with the Donald Trump administration previously. And the urgency to relax the rules between the two countries is now even of more importance because there's a significant amount of shortage going on everywhere. And the US side is also suffering significantly from this because, as we discussed in the webinar also on Tuesday, as you all saw, that the chip shortage has caused the auto inventories, for example, to be down so much as 70% at dealership levels that you can't even make anything, that you can't even sell anything. So there's a widespread concern over here. This is the first step in trying to solve this, and it should be positive. I do not know much more detail exactly as to what will come out of this, but what happened overnight as this news came out was stocks like SMIC, which is the Chinese biggest semiconductor company based in Hong Kong, was up 10% in Hong Kong overnight trading session, and it was up 5.5% in Shanghai. So expect that strong momentum that we saw in Asian semis to carry on into the United States with a strong response this morning. So expect all semi stocks to be the hot with power gap higher everywhere across the board. That's the first one. Second one, the little speculative play, which we have discussed many times, a KERN, KERN. This stock is spiking sharply in pre-market. Just moments ago, the news came out that they're going to be doing a tuck-in acquisition. I don't even have the details on this one yet because just as I was starting this podcast is where this news came out. A KERN, which provides the software. This is not a cannabis producer. This company provides software to other cannabis producers to track inventory, to comply with regulatory laws for each state where they sell their cannabis products, and to basically overall control the sales and the revenue cycle, including even marketing functions. It's a one single stop shop to provide all of those functions, the back house functions on the computers and the software for all the cannabis producers. It's the pure play on that. This company, KERN, is announcing just moments ago that they're going to be acquiring a tuck-in acquisition they're doing here called Viridian Sciences. The terms of this thing is not disclosed. So we do not know exactly how much they're paying for it or how much is going to contribute to the cash flows. However, this is an all-stock deal, and the headline of this deal reads, the deal is going to be accretive to revenues and earnings and is expected to contribute positive free cash flow beginning immediately. So there you go. This stock is going to sharply gap higher by more than 20% in pre-market. Another another one that I would like to quickly mention is WIMI hologram. This is another speculative play from China that is going to gap higher by more than 15% in pre-market. It closed yesterday at $7.88 and is trading at $9. Many JAG clients would know that on Jaguar Media, if you go over here and you type in right here, put the dollar sign and WIMI, Chronicle presented a speculative bullish case on this hologram cloud company based in China. First time we covered this name. And so you can all watch this. This was on February 24th. And since then, in the chat room, we have discussed this stock a couple different times. This morning, they're announcing yet another partnership with China Telecom, the education partner, the education side of the business. Hey, Chronicle, do you have any quick thoughts as to what this exactly partnership is? You want to spend 30 seconds or a minute to tell me what this is?
So the details are not that clear yet from the press release, so we'll have to wait for more details on that. But yeah, another deal with China Telecom.
Yeah, so this is on top of the major similar deal that was signed with China Telecom, I think about 2 weeks ago as well, and that also popped the stock hard. So we're going to see another strong pop in this stock as well. Let's see how far this goes. And if this is all not enough, yet another small deal in another speculative name, and this time it is Triteras, TRIT. This stock is also going to small pop in pre-market, but let's see if it's going to gain any momentum. This has a very high short interest. The stock closed at 740. It's trading at $7.60. They are also acquiring what a small tuck-in acquisition they're doing, and this is called Invoice Bazaar. That's the name of the company. This is a tuck-in acquisition, Invoice Bazaar. And in this case too, the terms of the deal were not disclosed. And apparently what this deal will do is that the acquisition will close sometime by the end of April. And this deal is going to allow the company to get into the United Arab Emirates market in terms of providing blockchain led invoicing mechanism for trade settlement for the crude oil products and many other kinds of products coming out from the United Arab Emirates as well as other parts of that particular region. Again, the details on this are very, very limited. We do not even know exactly what kind of price they paid, but this is yet another deal. So lots of small deals, some big deals, some small deals. So some of these stocks are going to be moving higher today. Now, with all of this said, I do have one stock that I would like to cover, which is OMEROS, OMER. OMEROS. This is a biotech, and there is a rather asymmetric bullish opportunity here, in my view, in OMEROS. And the stock has recently pulled back from high of $22 to $23 per share to about 18 to 19. MACD and RSI have corrected enough. From here, we could start to see a new leg higher in stock. And there's a very important catalyst coming up, but it's not until July. I think this company, this pullback has presented rather an interesting opportunity that was not previously available given the strong momentum previously. So let me just give you some background on this one. TATMA, which is also called hematopoietic stem cell associated thrombotic microangiopathy. You can see I just chopped that pretty big time. It is an adverse event associated with stem cell transplants. At the heart of it, TATMA is an endothelial injury condition where endothelial damage activates the lectin pathway of the complement system, causing a strong immune response. Conditioning regimens, graft versus host disease, for example, and injection associated with transplants can cause all kinds of endothelial damage at the root cause of the damage that happens to the body. Put it differently, in surgical environment, when you see, there's a lot of conditions that can emerge that cause effects to the body that can be avoided if there were better procedures that were available, and causes infections during a transplant procedure. While the occurrence of such such environment is rather rare, but the number of stem cell transplants that are performed in the United States each year is somewhere between 25,000 to 30,000 annually. And this incidence within patients receiving transplants is actually relatively high. About 40% of the people that gets any kind of a stem cell transplant of the 25 to 30,000 people that go through the surgical procedure each year, they end up getting injured during the surgery and such and such. So because of the very high risk of that and the unmet need entirely, the mortality rate is also very high. So put the math around it: 25 to 30,000 surgeries each year, of which 40% basically get a very high level of TATMA. So that, and then of that 40%, so we're looking at about 15,000, roughly 10 to 15,000 patients. The mortality rate in that group is very high, as much as 90%. So people just die from it. And so currently there are no treatments approved, though it is expected that some off-label items will be coming to the market, but they are still far, far away. This company, OMER, has a product called narsoplimab, which has become the first in class and has potential for significant differentiation compared to anything else in the market. And what narsoplimab does is it targets the lectin pathway of the complement system. And then as a result, the intact classical pathway allows for response to infections, and other complements inhibitors block the cascade further downstream in the bloodstream, effectively turning off the entire complement system. And that causes the infection rate to go down tremendously. And this company, as a result, with this technology, has the first mover advantage with a significant lead compared to anything else that's in the market. Now, this particular product, given the unmet need and such a high mortality rate that kills between 10 to 15,000 people in the United States every single year, there is the FDA has been extremely lenient about this, and they have, if you look at the press release that came out last year on October 22nd, the FDA, this is all buried in this detail, the FDA has set a very low bar of expectations with an efficacy threshold of only 15%. With an efficacy threshold of only 15%. That's all the efficacy that the FDA has described that the company needs to show in order to get the approval for this particular drug and to launch it in the market in the earnest. In the meantime, on October 22nd, this company posted an efficacy rate, or what they also called the total response rate to the drug, of 61%. Actually, it was a blended rate depending on which procedure, but it was somewhere between 61 to 74%, which is significantly better than the minimum FDA threshold of 15%. So the data was extremely clean and very, very good. Multiple times this data was reported, particularly in this press release on October 22nd. Additionally, on January 19, which is what sparked this stock with a strong rally at the start of the year, the FDA, given the urgency of it, they said that we are going to set July 17 PDUFA for approval of this drug, and we are going to completely bypass any kind of advisory committee meeting before we get there. Typically, when there is a phase 3 product on the biotech side that is coming to the market, you see that there's always an FDA AdCom meeting where a bunch of experts get together, and then they sit together, and then they approve it, they give an opinion, and then the final call on the approval is made by the FDA. In this case, they're bypassing that advisory committee entirely. Not going to happen. They're going to go straight to the PDUFA, which is expected on July 17. Given such a high response rate of the drug and a low threshold that the FDA has set, plus bypassing of the AdCom meeting, there's a very high chance that this company will get the approval for its key drug, and it will come to the market sometime in the third quarter. More importantly, given such a high response rate, ORR that is, the uptick in the medical practitioners community is going to be also rather very strong right away. So I expect the sales channel to pick up immediately after July 17 PDUFA, and we could see this company post a robust earnings report in Q3 and Q4, and then continuing that momentum well into 2022 before any kind of normalization of trend appear. That's not going to happen until all the way to 2023. And then lastly, typically with companies like this, when they get a significant approval for a major drug, then side indications of that drug where they can branch out and go into side markets that are not addressed yet also then start to come into the picture. I could see that happening also down the road. And the one last thing I will mention is that OMER has rather a significant amount of bullish option activity that is positioned. If you go to the month of August, you will see more than 10,000 open interest in August 20 call options. Back in the middle of January, all 10,000 of these contracts were bought to open for a little over $5 per contract. But since the stock has pulled back recently, these call options value have come down from 275 to 470. So they're slightly below where the bullish bet was placed. This is a $5 million bullish bet in the August 20 call options. And similarly, you can see that there's a very one-sided bullish bias in the option market with really no open interest on the put side, but in the January month, on the call option side, you will see a significant amount of open interest in the January 15, January 17, and January 20 call options. Both of these months, August and January, is going to be after the July 17th PDUFA. So there's an asymmetric opportunity in my view with the stock having pulled back. I think it can easily climb back to mid-20s in the long term. And who knows, depending how strong the uptick will be, could go much, much higher and maybe eventually will become an M&A target as well. So that's it from me. And by the way, Jay is off today. He's not with us today. He's taking the day off. So let's go straight to Chronicle.
Morning, everybody. Today I'm looking at Bentley Systems, BSY. This is a fairly recent IPO, and the company provides software which caters to infrastructure engineering, which is still a very much under-penetrated market. Currently, most of their revenue comes from public works like government projects, utilities, but also there's a significant contribution from commercial and industrial construction. And these solutions cover a large portion of the entire project lifecycle. So everything from planning to workflows, inventory management, construction scheduling, as well as the delivery itself. And on top of that, Bentley also has solutions that cater to post-completion, essentially tools for simulation, monitoring, and maintenance. As far as I know, there's no other competitor that offers all of this in one package, which is probably why their customer retention is practically 100%. Now, what caught my attention was this KeyBank note from a couple days ago, in which they upgraded the stock to overweight with a $52 price target. And their analyst, Devin Au, highlighted 3 key tailwinds going forward. So first of all, the recent extreme weather that we saw in the southern states have sort of helped to create awareness over just how under-digitized the infrastructure networks there have been, especially in critical areas of water and electricity utilities, which is exactly the area of Bentley's specialization. Early estimates are pegging the damage in Texas to be between $200 billion to $300 billion in terms of repairs. And separately, the current backlog for needed improvements in highways nationally exceeds $189 billion. And not to mention, we also have the upcoming infrastructure bill in the works. So that's the first point. Point number 2, KeyBank is expecting some growth initiatives this year that are centered around upselling, cross-selling, SMB expansions, emerging market growth, and also some contribution from product pricing, higher product pricing. This company is also expected to see a 100 basis point improvement in annual margins. Looking at the latest conference call, management is in the midst of streamlining the cost structures within G&A, and they're aiming for between 35% to 40% operating margin as a long-term target. And then the last point KeyBank makes is the fact that Autodesk recently announced that it plans to expand into public infrastructure opportunities, starting with the anticipated acquisition of Innovyze, which is a water infrastructure software vendor. KeyBank is saying this is essentially a validation of this entire space and its end markets. One final thing, in terms of street estimates for 2021, consensus is currently looking for 14% revenue growth to $905 million, which would be an acceleration versus 8% last year. I think it's feasible. As for EBITDA, consensus is expecting 12% growth to $292 million, which would imply margins coming in right around last year's level, even though management said they're doing some streamlining. So I think there could be some upside surprises with the EBITDA. Valuation-wise, we're looking at roughly 13.5 times 2021 revenue and 43 times EV to EBITDA. So the stock is on the expensive side, but I think there's a strong case to be made for paying a premium to own the company.
Yeah, very interesting. Hold on a second. I want to just check real quick because if you BSI market capitalization is about $12 billion and they're going to do about $900 million in revenue. So I see your point over there. But there's also going to do double-digit growth rate, which has a potential to a bit surprise to the upside. So here's a question for you. On top of everything related to Texas, which naturally is going to benefit this stock based on this assessment, do you think any kind of upcoming infrastructure bill from the Democratic Party is also going to be just the icing on the cake for this?
Yeah, I mean, like I could see road repairs being one of the catalysts.
Yeah, because based on this slide right here, I mean, they got their hands on everything, right? Buildings and facilities, discrete manufacturing, electric and gas, cities and campuses, construction, engineering, all of this. This reminds me so much of Arcosa, which was another fantastic play by you a while back, and that stock has been coming back, roaring back sharply as well recently, and I expect this to take out the $65 resistance and go on to make new 52-week high. Just reminds me of that, but maybe there's some differences over there. But anyways, I think they are all going to benefit, all of these construction and infrastructure stocks. So one to watch. The space is going to be hot in the next couple of months, depending on what comes out as the next stimulus package. All right, folks, we're going to stop over here. Thank you very much for joining, and we will see you in the chat room shortly.